Hi dear students, after some times again we are starting the webinar series of 3A Sri Lanka, the revision program for the strategic level corporate taxation. Okay. Now today the main focus is one of your favorite topics, which is the resident company taxation. Then the resident company taxation, I have taken resident company taxation as well as with one of the new area, which is taxation and business decision making. The both of these two topics together. Then in the, as you all know, in my first revision session, I have mentioned that what is the scale or the weightage of the syllabus given for the each subject or a syllabus in the topics. In that sense, in the company taxation or a resident company taxation, we are having a 30% of syllabus weightage, and the taxation and business decision making 10% of the syllabus weightage. Then today main focus in the revision session is to cover this all together of the 40% area. But I am highlighting this is since this is a revision session, I am going for the more or less in the questions. The question is the pilot paper, company taxation question. Now the pilot paper has published, it's with you all. Then you can join with me effectively with the paper, and the answer is there, paper is there, and my explanations are there, and the theory, you should have a solid theory understanding and the solid theory knowledge to do this 25 marks question. Then this as a question as a whole, this is the main question which you all receive in highest marks, which is 25. Then and you all love to do this question. Then this should be Patrice and Patrice, then you all can save your time and take the maximum marks out of this question. Okay. Then today it's a briefing of what I am going to do. Then we will see what is the session outline for the revision session 3. Then the main focus is on income tax liability of a resident company, then taxation and business decision making. After that, we will see for company taxation 30% syllabus area, what is the main focus as the student, what you all should know. In that, the brief discussion on these areas, which is transitional provision gazette notification. Now transitional provision, there are two gazette notification. One is issued on 1st April 2018 and second one is issued, which is amendment gazette notification for that transitional provision. The first gazette notification, this was issued in 17 September 2018. Then there are two transitional provision gazette notification. I will explain what is the importance of these transitional provisions gazette notifications. Then imposition of income tax section 2. As we have did in the value added tax, when doing that question, the main section is the imposition. Like that in the Inland Revenue Act number 24 of 2017, the imposition of income tax is the very important area. You should know, it's the base. And second one, taxable income, which is in section 3, we will going forward, we will look at what are these areas and how this is important to your company taxation question. And the assessable income, which is section 4. Assessable income, as I explain in here, the sources of assessable income, the business income, investment income and other income. Assessable income from business, assessable income from investment, and the assessable income from the other sources, which in the section 6, 7 and the 8 of the Inland Revenue Act. Then there is another source of assessable income, which is employment income. Then it is not in the part of the company taxation, it is more or less going for the individual taxation. Then when doing company taxation, the one of the main area is the deduction rules. To compute business income, you should know what are the deduction rules available in the Inland Revenue Act. It is the key. Then in that we have 3 main deduction rule. Even I may say it's as a 3 main deduction rule. In the act also it has mentioned as a general deduction, which is the first one. It is not a deduction, it is a, for your wording, it is a disallowable expenses mentioned in the section 10 with the Gazette notification number 2064/54. It's also issued on 1st April 2018. What is this Gazette notification? In this Gazette notification, the levies and the taxes should be disallowed in the tax computation. When arriving into business income, what are the levies and taxes we should disallow? The list has given in this Gazette notification. Then I have mentioned 2 Gazette notifications earlier, 2 Transitional Provisions Gazette notification, and thirdly disallowable levies and taxes under section 10 subsection 1. Then this is a 3rd Gazette notification which you should look at in when you are, if the student, if you need to take the highest marks in the company taxation, then you should have all these information with you. General deduction, which is disallowable expenses in section 10, and the main deduction rule section 11. It should be look at, it is a general provision to deduct expenses when computing the business income. Then the third one is specific deductions. Why it is specific deductions? Because specifically it has given these items you should deduct, or if not, you need to disallow based on the provisions of the Inland Revenue Act. For an example, interest, finance cost, it's governed by section 12 as well as the section 18 both. Then we should do strictly as per that provision. That's the meaning of the specific deductions. Then it's in section 12 and 12 to 19, and I have included section 24 and section 31. Section 24 more or less the reversal of the provisions, doubtful debt written off, it's in the section 24. Section 31 is the leases, annuities and the installment payments, which is even in that it's not the specific deductions. These section 24 and 31 very important when you are computing the business income. Okay. Then please, now this is a revision session. Then if you thorough with the theory areas, then it's very helpful for you to at a glance take this knowledge and do your paper. Then the list of specific deductions I have taken for your easy reference. Now in the section and the particular name, why I am telling you should familiar with these sections. Then it's an open book referential examination, but in the section, this is 25 marks question, you are not in a position to check the act and write the answer. It's a 25, it's the calculation question, you have to do a lot. Then the basic understanding and the high level of memorization and the understanding of these areas are very, very important. Then section 12, interest expense, section 13, allowance for trading stock, section 14, repair and improvement, section 15, research and development and the agricultural startup expenses, section 16, very, very important to you, capital allowances and balancing allowance. Without capital allowances or balancing allowances or assessable charge, you don't have a company taxation question. Then section 17, losses on realization of business assets and liabilities. Section 18, deductible amount of finance cost, very, very important. This is going together with section 12, finance expense. Then section 19, business and investment losses. Again, it is really, really important. All these are really, really important, but there are a few adjustments you should know very clearly under this specific deductions. Then how to compute gross tax liability. Now if I have gone again for the first part, of my presentation in that the taxable income. The section 3, how to compute taxable income, it is given in the section 2 separately. It is the gross income tax liability. The main idea is to, for year of assessment, compute the income tax liability. Then that income tax liability comprised in two parts under Inland Revenue Act number 24 of 2017. One is tax on taxable income. Second one covered under section 88 of the Act, tax on final withholding payments. Then altogether we are in the total income tax payable. Then it is not the final answer, the computation of tax liability, but we have to compute what is the balance tax payable for the particular year of assessment. In that, balance tax payable equal to tax liability or a tax on taxable income into taxable income into particular tax rate, which is mentioned in the first schedule to Act. Then you all arrive into tax liability, then deducting tax credits from that tax liability, you all in the answer of the balance tax payable for particular year of assessment. That's why in part A, taxable income into tax rate or tax on taxable income minus tax credits. Very, very important to know about the tax credits, if any, and plus final withholding payments, the application of the particular rate or tax on final withholding payments. Then these A plus B is the composition of your tax payable. I think it's clear. Then now I have mentioned the final answer should be balance tax payable. We are not ending with the tax liability. Then to compute balance tax payable, we shall deduct the tax credit available to us. Then what are the tax credit available to us? Then 1 to 5 I have listed common the tax credits available in the Inland Revenue Act. In that first one, quarterly installment payments under section 90. Again, I am in the 1 to 5 I have referred to the sections. Then when I am doing the tax administration part, I am again going to these sections and explain to you how importance of these sections. Then quarterly installment payment under section 90 and the non-final withholding tax deducted under section 84. Now, most of you all know that we are having the assessable income from investment. In that, assessable income from investment is subject to withholding tax. Some sources of the investment income subject to final withholding payment. Some subject to non-final withholding payment. For an example, if I have taken dividend, a dividend income is subject to at a rate of 14% of the final withholding payment. Okay. Then again the interest income of an individual. This is company. For an example, I am taking this, the interest income received to the resident individual, it is deductible at the withholding tax rate is 5%. If deducted, it is final. Likewise, but in the company interest income, it is if the WST has deducted, it is not a final withholding payment. Then we can claim the tax credit in that. That's why it's very clearly given non-final withholding tax deducted under section 84. For interest income, under investment income, we are assessing the gross interest income and we are deducting the 5%. If 5% of withholding tax has deducted, we are deducting it as a tax credit. Okay, I think it's clear. Then third one, economic service charge paid under ESC Act number 9 of 2009. Then ESC in the quarterly basis, we are paying economic service charge based on our turnover. Then if you have paid that paid amount plus any balance carried forward to the year of assessment, you can claim as a tax credit. And fourth one, notional tax credits carried forward. Actually, this is a link to the Act from the Transitional Provisions Gazette notification. Then, if there are carried forward notional tax credits from 2017-18, then it is the brought forward balance from 2018-19 we can claim for the 3 consecutive years. That means 18-19, 19-20 and 20-21. These are the 3 years. After that it's no more valid. Then if there are notional tax credits, in earlier act we had notional tax credits on secondary market instruments. For an example, treasury bills and treasury bonds. If such notional tax credits are carried forward to 2018-19, then such notional tax credits we can claim up to the 3 years of assessment after effective of this act. That means 18-19, 19-20 and 20-21. I think it's clear. Then fifth one, capital gain tax paid under section 82. Why suddenly there is a capital gain tax? Because capital gain tax is a transaction tax. When the transaction happens, within 30 days of that transaction, if there is a gain and the gain exceeds 50,000 rupees, then we have to pay the capital gain tax at the 10%. Then that paid capital gain tax we can deduct as the tax credit going forward when doing the company taxation question in the pilot paper. Then you will understand this more. Then next one, schedules to the act. Now when computing the balance income tax payable under the company taxation question of your 25 marks, this 6 number of schedules are very important. Why it is important? See the reason why it is important. First schedule specify the tax rates. Without knowing tax rates, can you compute the income tax liability? No, you cannot. Then you should know the thorough knowledge about the first schedule to act with tax rates applicable to the resident company. Then second schedule, investment incentives. Then now I am not going to explain much about the investment incentives, but in my second part, which is business decision making part, I will take this and I will explain the theoretical area as well as how this is applied to the question. And the third schedule, which is exemptions, I am not going to highlight or I am not going to discuss this much. When as it is possible related to the question, I will explain. Then fourth schedule, very important, capital allowance, balancing allowance and the assessable charge. I have told you all it's in the section 16 of the specific deductions. Section 16 plus fourth schedule to the act, very important for you to compute the capital allowances, and at the time of disposal of particular depreciable asset, you need to compute balancing allowance or assessable charge as it is applicable. Then the fifth schedule, qualifying payments and relief. This is the fifth schedule is combined with the section 52. The guideline is given in section 52 and plus what are the qualifying payments, how to claim, what are the maximum limits are given in the fifth schedule to the act. And why I have the red in the relief? The reliefs are not applicable for the company taxation. Reliefs are applicable for the individual taxation. Then therefore, for your purpose, company taxation only applicable from the fifth schedule is the qualifying payments. I think it's more clear. Then last one, sixth schedule, temporary concessions. There are a list of temporary concessions given in the last schedule, which is sixth schedule. In that, why it is a name of the temporary concession? Because the concessions are available for the year of assessments of 3 years. How it's 3 years? Coming from the new Act number 24 of 2017, it was effected from the 1st April 2018. Then from 1st April 2018, the 3 years, that means again 18-19, 19-20 and the 20-21, that's for only 3 years. These 6 scheduled concessions are available. That's why the name has a line in as the temporary concessions. I think you have now brief at a glance idea of the schedules to the Inland Revenue Act, which are very important when computing the company taxation. Now, the main focus is on the pilot paper section 2 question 3 part A, which is 25 marks question. Again, what is the importance of this I have mentioned. It is as the question highest marks you can gain and you all are allowed to calculate, then practice this more and more, then you can gain the expected marks very easily. Then that's on the company taxation, all the areas what you all should know I have explained in the nutshell, but I am coming to more than that, what are the things you should know. Then the second part of my session today, I am focusing on the 10% area, the taxation and business decision making. This is actually a new area added to the syllabus, but when the new Act number 24 of 2017 introduced in the 1st April 2018, if you check your 3 papers, that means December 2018, June 2019 and the December 2019, these 3 papers in the 50 marks question, there may be part 3, maybe part 2, this part has tested. Then this is included to the syllabus, very good area for you to earn marks by writing. Again, this is the narrative area which you have to write a solid answer by proving your recommendation or advice to you to, again a good area to you to act as a tax consultant. Then these are the syllabus areas in this 10% of the syllabus weightage, in that impact of taxation on business and finance decision. How the taxation impact to your business and the financing decisions. Then you have to evaluate the effectiveness of the tax strategies and the propose on the tax planning and on business undertakings by analyzing what? Financial statements. Without financial statements, we are not in a position to do any tax computations or taking a tax decision. Then it's the first one. The second one, evaluate potential risk in terms of direct and indirect taxes, that means income tax, VAT likewise, and matters which require corrective action for statutory compliance. How we are now in the Act, we are having tax administration provisions. If we have not complied with that, we are having again penal provisions. Then penal provision, it is high cost. Taxes in default, penalties, additional taxes, these are highly cost to us. Therefore, to reduce that cost, how we plan our organization to reduce that risk of tax burdens. Then the last one under that, compile reports with alternative courses of action available to existing tax issues supported by necessary computations. If there are tax issues in the organization, how to resolve that? As a tax consultant, you shall again provide a tax opinion or a tax advisors based on the provisions of the Inland Revenue Act. Okay. Now, the last part, personal taxation. Since I am discussing the company taxation, I am not going to discuss in the personal taxation. Now you know, under 10% area of business decision making, these are the nitty-gritties you should know. Now you may have a question that why I have selected this part with the company taxation. What's the relationship? There is a relationship. What is the relationship? This taxation and business decision making is testing under your more or less, it's testing under your 50 marks question. That's mean company taxation, after that you may receive this kind of a question. Then the 50 marks question based on what? Common pre-scene available to all 4 subjects. Then in that sense, if you when analyzing the common pre-scene, you should know what are the tax issues in that company, what are the proposals I must do, how it is linked to the Inland Revenue Act, Gazette notification. Then all these things you should know. That's why I have linked this 10% to the company taxation. Okay, I think all round it is clear. Now we will go for our next objective. It is the critical eye on resident company taxation, which is 30% area. Why it is critical eye? I need all of you to take the maximum marks out of this question, because this is actually, if you practice, if you in line with the Inland Revenue Act, you can earn the highest marks for this question. And you all having the interest in to do that, not like other questions. Therefore, time yourself, practice yourself, and take the critical eye, have your critical eye on this company taxation question. Then we will see what are the importance of what are the criticalities of this company taxation question. In that first one, what is the testable year of assessment? Now, your testable year of assessment is 2019-20. I have included that as the without proposed changes. As you all in the tax maybe tax field, maybe not, but in the October you are going to do the taxation paper. Then I shall explain these things to you. Now, from 31st December, after 31st December 2019, there were so many changes in the legislation provisions, but they are under the proposed changes to the subject to the further or subject to the proposed amendments in the law. Then that laws are not implemented yet. Therefore, even your year of assessment is 19-20, you are testable up to 31st December. Then second part, in this question, where is in this question in your paper? It is in section 2, question 3, part A. It's the format of your paper. And the third one, basis of the question, this is based on the common pre-scene. There is a common pre-scene available for the all 4 subjects. Then based on that common pre-scene, what are the relevant areas for the taxation is providing, or you need to scrutinize and understand all these things when reading, analyzing and understanding the pre-scene. Then based on the common pre-scene issued before the exam, unseen question will be provided. Then based on the pre-scene, you are receiving an unseen question at the examination. That's why you can well prepare for this part. Then marks allocated, all of you all know that, and I have repeated, based on past practice, it's a maximum 25 marks. Then in the first day when I am starting value-added tax, I have mentioned this is a narrative paper. You have to write more, less to calculate. Even calculate using that computation, you have to recommend your answer. You have to confirm your answer. Then more towards to the writing part. Your position is, I am again the repeat in this, your position is a tax consultant. Then you have to write more. Then even it's a writing paper, there are 25 marks allocated for calculation for you all. Then again you must practice this. Then fifth one, time allocation, it's only 45 minutes. Even how much you love to do this question, it's not applicable. The time is time, it has given only 45 minutes, I am not lying, it's 25 marks into 1.8 minutes, then it's a 45 minutes. I think you are clear about this, and be a smart student at the examination. 3 hours and 15 minutes you must stick to the time. Then to do this company taxation question, what are the legal provisions applicable? Then main provision is Inland Revenue Act number 24 of 2017 and the relevant gazette notification. In that the 3 gazette notifications I have explained, which is first Transitional Provision Gazette notification, second one amendment to the Transitional Provisions Gazette notification, third one the disallowable taxes and levies, fifth one the capital gain tax return. It is applicable at the time of the applying the tax rates. Then the gazette notification on the withholding tax. These are the 5 relevant legal provision for you to in the good or the comfort area of the company taxation question. Then case law provisions. Actually, I have included this part for the company taxation question because again this case law provision may be included in the 50 marks question. It's based on the paper, but the permanently I cannot tell, but this may be included in your company taxation question with the information of the company taxation question in the 50 marks total question. Then if there are some paragraph, some information given for this case law provisions in the company taxation question, you should need to separately address that according to the case law provisions. Don't worry, all the case law provisions is given in your 2020 curriculum, the names of the case laws and everything is clear. It's very clearly given. Only thing you have to study and prepare. I have taken 4 main topics, not the case by case, but 4 main topics applicable for the case law provision. Then you can understand how this going with the company taxation question. In that first one, adventure or concern in the nature of trade. That means how to identify, is this a business gain or this is an isolated transaction, is this a business profit or non-business profit. Then that's in the first one. Second one, capital and revenue expenditure. Then if it is to identify using decided case laws, you shall need to identify whether this is capital nature expenditure or else this is revenue nature expenditure. If this is capital nature expenditure, it shall not be deductible when arriving into business income. If it is revenue nature expenditure, you can deduct it when arriving into business income. Then third one, expenses incurred for production of income, production of profits and income. Any expenditure, this is covering under actually a main deduction rule, which is section 11. In that, any expenditure incurred for the production of income you can deduct, if not it should be disallowed. Then meaning of a plant, how we recognize a plant, can we provide capital allowances to the plant, and these things are discussed in the meaning of the plant, the relevant, there are 2 case laws applicable for this. Then this is again like that 10% decision making part, some information relevant to the case law question may be included in your company taxation information or adjustment paragraph. That's why, to make your life easy, that's why I have included this. Then now the main target is to discuss on computation of tax payable by a resident company, which is your learning outcome in this session, and in that the basis question is the pilot paper question 3 part A. Then we will see there is a pre-scene, but in here I don't have much time to analyze the entire pre-scene, but I have taken very important parts of the pre-scene which relevant to your question. First we will go through that and we will read the question and we will go for the answer. Now again how I am approaching to the answer. First the pre-scene, second one as previously we will read the requirement and go for the question. Then I have prepared my own answer for this, and in that part it's a Excel, then we will discuss with the answer all the relevant notes and all these things I will explain separately to you. Then the next part, analysis of pre-scene information. Now we are in the company taxation question. In that we will see how we are approaching to the question. The first part is the common pre-scene. In the before maybe 1 month or 6 weeks before the exam, you are receiving this common pre-scene. Then that's part we are in now. Analyzing of pre-scene information. What is our organization? It is a Pinnacle PLC. Okay. Then 3 divisions in the company. 3 divisions in the company, Wellborn division, Solar Electro division and Machine Tech division. Now what they are going to do using these 3 divisions? In that has been in existence of 35 years and creates powerful diesel engine. It creates powerful diesel engine. That means manufacturing of diesel engines for boats, trucks and commercial farming equipment. Now they are in the Wellborn division, they are in the manufacturing business. In the Pinnacle PLC, there are 3 main divisions. In that 3 main division, one is in the manufacturing of diesel engine for boats, trucks and commercial farming equipment. The second division is Solar Electro division. In this division, what their business? The second division, Solar Electro, was recently acquired from a high-tech manufacturing firm. Solar Electro produce state-of-the-art solar power engines. Again, produce. That means they are manufacturing solar powered engines. Then again, in the second division, they are in the manufacturing business. Why I am highlighting and putting more weightage on these things without knowing what principal business activity of your organization, how you all know what is the allowable expenditure, what is the disallowable expenditure, what is the tax rate I am going to apply for this, what is the tax rate applicable to us, we don't know. Then first thing, you should have clear and a high level of understanding of the principal business activity of your organization. Now this is your organization, you are the tax consultant of this organization. Then the third part, Machine Tech division. Machine Tech engages in a wide variety of machine service and repair operations. Now see, 2 divisions are in the manufacturing sector, 1 division are in the service sector. Service sector, okay. Then third one, principal. Now analyzing all these 3 divisions business activities as the Pinnacle PLC, what is the main business or principal business activity? Manufacturing of solar power engines, diesel engines to local and export market. The local market as well as to export market, they are selling and providing of machine services and repair. Now this is your overall understanding of the very small brief understanding of the organization. Then we will see with this information how we are going forward to the question. Then okay, then we will start the question. Before starting the question, I need to analyze again company taxation, the overall picture of the company taxation in a mind map wise for you to understand it very clearly. We will see how it is important. Okay. Then company taxation, which is your 30% area. To compute company taxation, you should know all these areas. You should know all these areas. In that, first one, the charge-in section. Charge-in section you should know, which is imposition of income tax. Then second one, this is section 2. Then the second one, under that I am taking the most prominent sections. Then second one, how to compute the taxable income. We have discussed this part. And the third one, to compute taxable income, what we need, which is our assessable income. Assessable income. Under assessable income, you have for the resident company taxation the three main assessable income. Three main assessable income. First one is the very important business income. Business income, which is in section 6 of the Act. Please go through section 6 of the Act. It is very clearly mentioned what are the list of business income, service income, the manufacturing income, buying and selling income, the restriction of capacity to do the business, that income, and the assessable, the charge, how if the depreciable asset has disposed. How we are going to compute, the computation part is in the section 16 and the 4th schedule, but it should be part of the business income. That part has mentioned in the section 6, and the exclusions from business income, all these things are in the section 6. And the second part is the investment income. Assessable income from investment. Then in the investment income, which is in section 7. Section 7, in the investment income, there are two main parts. The one part is income from investment activities. One part is income from investment activities. Investment activities. Other part is gains from realization of investment assets. Realization of investment assets. Investment asset. Theoretically, you should know all these areas. Then, what are the income from investment activities? Examples I am taking: interest, rent, dividends, income from natural resource payments, natural resource payments, then premiums. These are some of the examples for income from investment activities. For this part, why I have taken this, for this part you have to apply withholding tax. Withholding tax, some withholding tax final, some non-final. Non-final, for an example, dividend final, interest non-final, rent non-final. If the non-final withholding tax, we can take the withholding tax credits. Dividend, it is not a gain tax. Then Gains from realization of investment asset. First thing here, you should need to recognize this as the investment asset. It should be investment asset as per the definition given in the section 195 of the Act. Then if so, if there is an investment asset, the second one, computation of gain, there may be a loss also. Then in that sense, after the computation of gain, then application of the tax rate, this tax rate is the 10%. The different tax rates in the taxable income, Okay. Then investment income, and third one, other income. Based on the scenario basis, this you have to identify. If any income cannot categorize under business income or else under investment income, then it shall be categorized under other income under section 8. This is the one part of the computation of the company taxation. Okay. Then with this understanding, I am again going for the key area of the company taxation, business income calculation. To compute business income, you should have this knowledge. Then I am taking this as the business income computation, or a computation of business income. I have explained that in that you should know disallowable expenses, in section 10 subsection 1a and b. In this disallowable expenses, the disallowable taxes and levies, the Gazette of Disallowable Taxes and Levies combinedly you should know. Then the second part of this main deduction rule, what is the main deduction rule in section 11? The three things I am going to highlight under that. Main deduction rule, to deduct any expenditure when arriving into business income. How we are going to determine that? The first criteria or the first condition, it should be incurred for the production of income. Of that year of assessment. That's why we must know what is our principal business activity, to know that expenditure incurred to earn our revenue. Okay? Then should be incurred for the production of income in that year of assessment. What is our year of assessment concerned? We are in 2019-20 year of assessment, which is your testable year of assessment 2019-20. Then second one, it should not be capital nature expenditure. Now, if you are a smart student, you can link this with the case law provision. This both, revenue or capital nature expenditure, how to determine, and any expenditure incurred for the production of income. These two are very, very important. It shall not be a capital nature expenditure, and it should be incurred for the production of income in that year of assessment. Then capital nature expenditure, what is the meaning of capital nature expenditure as explained in the Act itself. And I must say in the section 20 of the Act, it's very clearly mentioned we must go with the generally accepted accounting principles. The computation, any figure we are taking, it is based on the financial statements prepared as per the generally accepted accounting principles. What are the accounting standards we are using? SLFRSs, LKSs and the SLFRSs for SME. Then based on these the standards we are preparing financial statements, then it is linked to the income tax too. Then capital nature expenditure, it's very clearly given in the Act how to determine as this is capital nature expenditure. It is the enduring benefit is going more than 12 years period. I am using the benefit going more than 12 months. Benefits going more than 12 months. This is the main deduction rule, and the section 10 there is a list. I suppose you to go through that list and understand what are the disallowable expenses. For an example, entertainment expenses disallowed, penalties, any charges to the government disallowed, and the provisions, any amount transfers to the accounts which is notional entries, these are disallowed, and the levies charged to the P&L such as maybe the fines, penalties and maybe taxes, maybe ESC write-off, these charged to the income statement, they are disallowed, and there is a disallowable list. And the personal or domestic expenses, all these are disallowed. I highly telling you to go for this list and familiar with that. Okay. Then we will go for as the second and the third part of the, I am linked to this one again. The third is the specific deductions. Specific deductions. Specific deduction, the list you all know, I am not going to explain it further, but when doing the company taxation question in the business income calculation, I will come to this. Especially in this, I will take section 18 and section 19 because I thought it's good to have the more understanding on these two sections. Others also are important, but there are more coverage, but for these two I need to explain more important areas. Then other than this 12, 13, 14, 15, 16, 17, 18 and 19. Other than the specific deduction, we need section 24 and section 31. Section 31, why it is important? The annuities, the installment payments and financial leases. Installment payments with hire purchases, annuities and financial leases. I am going to the explanation of these financial leases. Why? The very clearly given in the Inland Revenue Act, financial lease is the way of finance only. That's correct. Way of finance only. Then why this is important? The lease agreements entered on or after 1st April 2018, any finance lease agreement entered into on or after 1st April 2018, you should provide capital allowances if it is a permitted asset to claim capital allowances. Why I have used the wording of permitted? Maybe it's a travelling purpose motor vehicle, you cannot claim the capital allowance. then the previous provisions are not applicable for the lease assets acquired under lease agreements entered on or after 1st April 2018. That is why this is important. And section 24, reversal of provisions. Reversal of provisions, the write-off, these things are talking about. And here, any write-off bad debts, it should be a allowable deduction. Then, now these things done. Then investment income, you need to compute. This is the first part. You have to take allowable, disallowable expenses. Then you need to compute business income. Then you need to deduct business loss. If there is a business loss, I will come to that part. Section 19 is talking about the business loss. I will come to that part. Then in that, this business loss, you can claim against the business income. Business income, okay? Up to the level of that business income, you can claim. Then business income discuss, investment income discuss. Then after that, now we are having assessable income from business, assessable income from investment. The third one, we need the total assessable income, which is composition of these two if there is no other income. Then after that, we are in the final figure of our computation, total assessable income. Total assessable income. From this total assessable income, you must deduct qualifying payment. Qualifying payments as per section 52 and the 5th schedule to act, then you are in the taxable income. Then you are in taxable income. Then as I have explained, application of tax rates, you ended up with the tax liability and minus tax credit. This is the overall picture for you to have the good understanding of the company taxation. But this is not last. I recommend you to have a good understanding of the case law provisions with this case law provision, which is combined to your 50 marks or any of 25 marks question. I don't know where it is testing, but it is testable. Case law provisions and the high level of understanding of the gazette notifications. If you know these areas, there are a lot, but I have summarized as much as possible. Then if you have solid understanding of these provisions plus the solid understanding of the financial statements, accounting standards, then you are in a good position to take the 25 marks very easily. Okay. Then this is the overall picture. Now you all having everything with you all. Then we will start the company taxation question in the pilot paper. We are ready to compute the balance tax payable of our Pinnacle PLC. Before going that, the question, I need to give some instruction to you all. Now, the first thing is the format of your answer. The first thing I need to highlight is the format of your answer. Then in the answer format, here, every time in your answer booklet, have a first page for the computation of taxable income. Okay, I will take the first part and the schedules and the notes at a glance, then I will go for the question and the answer. Then here, again, we are going to do the pilot paper question, which is Pinnacle PLC. In your answer script, first page for if Pinnacle PLC, then your TIN number, the 9 digits TIN number, and the computation or income tax computation, income tax computation for the year of assessment (2019-20). This is the first. In your answer booklet, this is the company taxation, this is the first part. Don't start from the business income, don't start from the investment income, have your flow. Then in the exam, when you all start in the question, have this format first. Then it's very easy. I will tell you all how from the one adjustment, how you are going to put into the taxable income, how it's come to the business income and investment income. From the one adjustment, if all these things are go for the 3 or 2 places, once you read in the question, you can do that. Then this is the format for this. You may have your own formats. Then you can use that as more as it's convenient to you all. This is my sample format as a help to you all. Then rupees may be the thousands, or and then here assessable income. Assessable income. In the assessable income for company, we know we are having 2 main sources. First one is the business income, and second one is the investment income. In here, I will put schedule numbers. My first schedule to be in my question is business income, second schedule is the investment income. Then the other income, if it is there, we will have a line for this, maybe not, maybe there. Then business income, we have a figure, investment income, we may have a figure. Here I am taking, I don't have any other income. Then after that, the total assessable income. Total assessable income. My total assessable income is a summation of business income, investment and other, which is going to this part. Then less qualifying payments. Qualifying payments. Don't write relief. Reliefs are not applicable for the company. Less qualifying payments. Then relevant qualifying payments may be donation, donations for institutionalized care for sick or needy. Subject to limit. You should know what is the limit. The 1/5 of the taxable income, actual donation of 500,000, whichever is lower. I am thinking that you are having a higher level of this theoretical knowledge. Then donation for institutionalized care for sick or needy. Then next one, for an example, donation to government. Donation to government may be in the goods or money. Goods or money. In here, donation to government in goods or money up to the level of total assessable income you can claim. No limit. Then this goods or it's even in the money. Then if we think that we had this too, we have taken donation for institutionalized care for sick or needy. Maybe the company has donated to elders home in money. In that elders home, that donation we have taken according to the 1/5 of the taxable income, rupees 500,000 no actual donation, whichever is lower we have claimed here. And donation to government may be donation for the Apeksha hospital, the general hospital, then we can claim that it is, we have claimed. Now the total qualifying payments we are having here. After deducting qualifying payments, we arrive to the taxable income. Taxable income. Then, okay, taxable income. Then, application of tax rates as per the first schedule to act. Then, tax on taxable income. Tax on taxable income. Tax on taxable income. How to apply tax on the taxable income? I will go for the next part. Then there may be different rates applicable for taxable income. I will take such example. Now tax on taxable income, think that taxable income we are having on gain from investment asset. Gain from investment asset. Now what I am going to do, application of different tax rates. Application of different tax rates. Tax rates. Only we have now the 10% and the maybe 14, maybe 28%. On gain from realization of investment asset, from realization of investment asset, it should be that amount. This is the gain. It should be taxed at the rate of 10%. Be mindful of these things. You cannot take the entire taxable income and apply a flat rate if there are different sources, the tax under different tax rates. Therefore, it is really important to you to understand the particular types of the taxable income. Then here 10% on the gains from realization of investment asset, then balance taxable income. Balance taxable income. Balance taxable income. How to compute balance taxable income? The total taxable income. Total taxable income less the different tax rate, gain from realization of investment asset. Then we have to minus this, then we are having a balanced taxable income tax at the normal rate. Then for this answer we have to apply, this is the balanced taxable income, we have wrote here, and the applicable tax rate. Applicable tax rate as per the first schedule to act. First schedule to act may be 14%, may be 28%, maybe 40% based on your industry. Now we all have your this answer and this answer. Then total income tax liability. Total income tax liability. The total answer less tax credits. Less tax credits, as we have discussed the maybe non-final withholding tax, non-final WHT, quarterly installment payments, ESC, likewise all we need to deduct, and we are ending with the answer of ending with the answer of balance tax payable or refund due. This is my answer of balance tax payable or refund due. Done. This is your format. Please have this format. I am not telling you to have all this second part. You cannot, without reading the question, you cannot know, you don't know these areas. But at least in the first page, have this thing. Then it's really easy for you. Even take the space and have this total the tax credits and all. The qualifying payment, when you are reading the question, if there is a qualifying payment, then immediately you can take into this. And in the tax credit, if the quarterly installment payments paid, then when reading the question, you can put into the here. That's the importance. I need all of you to take the 25 out of 25 on this question. If it is so, it is the plus point for you. Then when reading the question, how to minimize the timing of reading the question and applying is the more important thing. To reduce the time, have this proper format is the one of the good thing for you. And the paper is marking by the human, then your answer should be in a particular the proposed very good manner to read and understand to another person. Therefore, this format, apply this. I am not telling you to apply, extract this. If you have another format, anyway, practice it and take the best use out of that. Okay, this is the taxable income. Then I will come to, for the first part, I will leave here as to the sample. Then we will go for schedule 1. I told you all in the business income and investment income is a separate schedules to the tax computation. Then your next page of your answer booklet, maybe next pages, next the next 8-10 pages is going for the business income. This is schedules to tax computation. Under that, again this is rupees, so LKR thousands, and the under that schedule 1, or no need to write again 1, the assessable income from business. Assessable income from business. In that, plus minus. This is the format. If you need to apply, add disallowable expenses or other income and the allowable expenses separately, if you need to go for that format, please apply. It's your willingness, but if you apply this format, it saves your time. It saves your time starting from the profit before tax, or there may be a loss, there may be a profit. If there is a profit, take to here and do your adjustments. And when you are doing adjustments, I am recommending to you to do the adjustment in this space. In this space, do the adjustment and take the answer and put the answer here. Or else, if you can go for the notes separately, it's again confusing you at that exam time. If you can have a very proper calculations in here itself for the examination purpose, but practically we are not doing that, but for the examination purpose, you can do like that. Then maybe the computation of disposal gain from the depreciable asset, then you can do the calculation here and take the answer. Okay, then it's a preferred method by me, but if you have a separate thing, you can apply that too. Then this is for the business income calculation. Then we are having a schedule 2, which is the investment income. Schedule 2, the assessable income from investment. Assessable income from investment. Assessable income from investment. In that, no plus minuses. Under the categories of investment may be your 2.1 interest income, which is gross interest income, maybe 2.2 is the interest income from maybe FD, savings, the treasury bills or treasury bonds. Then the second part may be dividend income which is under final withholding, then it is not coming to here. And the 2.3 may be rent, which is gross rent. Likewise, record your transaction and take the answer. And here the main answer and here main answer will be these two answers. Then it's really easy for you all to take in a clear format. It's easy for you all, and as well as it's a good presentation of your answer. Any other notes? I'm not referring to working. I told you to take it in here. Any other notes, if you need assumptions like that, go separately and put your note. Okay, I think the entire structure is clear to you. Now all the background information provided. Now we will start the question. Okay. Then this is the pilot paper company taxation question, which is in section 2. It is one compulsory question of 50 marks. Question 3 based on the common pre-seen, as I have explained. Then first we will go for the requirements and we will see what is the marks available to us in this question. This is a requirement. Required A. Assess the balance income tax payable by Pinnacle PLC, if any, in respect of the year of assessment 1920. What is the year of assessment 1920? What is my company? It is Pinnacle PLC. And what is my requirement? Assess the balance tax payable. Assess the balance tax payable. For how many marks? 25 marks. What is the maximum time you can allocate for this? 45 minutes. Okay, now you all know what you all have to do. Now we will go for the information. Now we will go for the information. What I can do, I am not reading the entire question one time and go for the answer. Then it's critical based on the time. I am reading one by one and go for the answer and explain and come back to the question. Okay, and any furthermore explanation needed, I will use the board and I will explain it clearly again. Then okay, this is the answer. Then if you have seen the answer, see in the 4 tabs, taxable income separately as the format which I have explained to you, and business income separately again as I have explained to you, and investment income separately again this format explained. Any other notes, it's mentioned separately, which is I think clear. Then but you can use your way how to compute that. Okay. Now, in the question, we will read the question and analyze the points one by one. Now, in addition to the information provided in the common pre-seen in connection to Pinnacle PLC, you are provided the following additional information for the year ended 31st December 2019. The year end is 31st December. That's why I have told you all proposed changes are not testable, because it is proposed changes. It's not a law. Then it cannot be tested. Therefore, then 31st December 2019, but even it is 31st December 2019, your year of assessment is 1920. Then Roman 1, Pinnacle PLC has obtained the approval from the Commissioner General of Inland Revenue to maintain accounts for the purposes matching with the financial year as per the provisions of the Inland Revenue Act number 10 of 2006, and also continue on the same basis under the transitional provisions under IR Act number 24 of 2017. That's mean I have mentioned about the transitional provision. Then I think that you all having a solid understanding of the transitional provisions, gazette notification with reference to capital allowances, leasing allowance, notional tax I have explained. Some provisions I will take with this question. In here, if you have take the approval, if you have already taken the approval under Act number 10 of 2006 to change the financial period, then you can apply that continuous basis under Act number 24 of 2017. It's very clearly given in where transitional provision, gazette notification. That's why it is given why their year of assessment or their financial period is ending on 31st December. Normally year of assessment is starting from 1st April 20 particular year and ending with the 31st March. But they are 31st December, that's why they have taken the approval. I think it's clear. Then you don't have any worries about that. Then the next part, Roman 2, additional details extracted from the unaudited income statement of Pinnacle PLC for the year ended 31st December 2019 are as follows. Now, revenue, these information given. Now, I will tell you all how to read the question and how to approach to the question. It is very important. Now, when reading the question, now when you are receiving the unseen in the 50 marks question, you all know the base information from the pre-seen available to you. Then therefore, you are reading this unseen based on very clear mindset because you are prepared. Therefore, don't waste much time on this. Read very carefully and take the advantage of your time. Then here the revenue in note 1, cost of sales, gross profit, then other operating income, administration expenses, selling and distribution, financial expenses, and we are having a key point which we need, which is profit before income tax, which is your starting figure for the tax computation, 5.4 billion. Then income tax expense and the profit for the year. Now see how to analyze the given information. Revenue has given. Note 1, revenue has given. If you see, when analyzing the pre-seen, you have understood that Pinnacle PLC is doing local selling as well as export selling as well as providing of services. Now you can see how their revenue break up, how they have earned the revenue throughout the year. Then export sale of Wellborn division, local sale of Wellborn division, export sale of solar electro division, local sale of solar electro division, service income from machine tech division. That's the summation or a breakup of 150, 738. Okay. Then here what you all can do. Now you all know what is your principal business activity. Now you are having the breakup of the revenue. In the pre-seen, we did not have any information regarding whether this is a group of company or a holding or a parent subsidiary, no information provided. Then if it is so, now we need to determine what is the tax rate applicable to this company. The one determining factor to the check what is the applicable tax rate is revenue. Clear? Then here we need to look at how the application of the tax rate. These are the things you shall do at the examination. Now, since this is a pre-scene available, you can ready and go, but this question we need to calculate here, and we will see what is the income source. Now, it is in my other notes, Pinnacle PLC, TIN and notes to the tax computation for the year of assessment 2019-20. Analysis of export revenue. Why I am going to analyze the export revenue? Because I can apply reduced tax rate of 14% as per the first schedule to act. Reduced tax rate of 14% on what? The provision of exports, maybe services, maybe goods. Then if it is predominantly conducting the business of providing of exports under specified business undertakings, then you can apply the rate of 14% irrespective of group or not anything. Then you need to compute what is the applicable tax rate for this. Then export revenue divided by total revenue. I have taken the two exports revenue given in the paper. The two exports revenue, the 98.2 and the export sales electro division 21.4. Now see how it has taken this 98.2 and 21.4, then divided by total turnover into 100. I am checking this company is under the category of predominantly conducting of exports. Now in my calculation is unfortunately 79.39. Then not under the category of predominantly, then we cannot apply rate of 14%. This is one of the crucial tests you must do in the examination. Then not predominantly conducting a business of export as per the first schedule, para 4, subpara 2, item B. I have given the extract in. You don't have to give this extract provision on the dot, but you have to tell we cannot apply the reduced tax rate of 14% because this is not under the category of predominantly conducting of the export, business of exports. That's all. Now you all know, okay, for my organization, Pinnacle PLC, the applicable tax rate is what? 28%. I think it's clear to you all. Then we will go for the next part of the question. Revenue, we have taken the maximum advantage from the breakup of the revenue. Then other income. Other income, profit from disposal, gain from realization of quoted public company shares, gain from realization of investment in small limited, dividend net, rent net, interest income from fixed deposit, interest income from T-bills, compensation on land acquired by land, the reclaimed the commission, interest received from land reclamation commission and compensation of land, then sundry income. In the most of the cases, these are other income. That's mean the investment income and the particular items we need to eliminate from the business income. But Lamai, don't hurry. Just read it out. First read it out, then have your understanding, okay, there is a disposal. Now, when reading the profit from disposal of PPE, okay, there is a disposal. I need to compute what? Assessable charge or balancing allowance. Take that understanding. There is a realization of quoted public company shares. This is quoted public company shares. This is what? Exempted under third schedule of the Act. And gain from disposal of investment in small limited. Now, you have to think, what is this investment? Then do I need to take the valuation at the 30th September 2017? what is this investment, what is the selling price, all these things should come to your mind. And dividend income net, dividend income net mean it's 86%, 14% already deducted. Then interest rent income net, the 10% WST, if the property belongs to resident person, then 10% WST has deducted. If the property belongs to non-resident person, 14% WST has deducted. Then these, the very high level of things should come to your mind. Don't do any adjustment on this, we will go forward. Now you all know what is the breakup of other income. Then 3, extracts from the administration and selling and distribution expenses. Take in 1 minute, just read what are the inclusions, salaries and wages, entertainment expenses. We know under section 10, subsection 1, entertainment expenses are disallowed. Donation and gift, it should be disallowed. Why? It is not incurred for the production of income under section 11, but you have to check what is donation. Is it a qualifying payment or is it not, cannot be categorized under qualifying payment? If it is, if we can categorize in under qualifying payment, whether is subject to maximum restriction of 1/5 of taxable income, which is 500,000 no actual donation, or this is a donation to the government, or donation to the list which given in the 5th schedule in the money or in lieu of money or goods. Then these things you must analyze. Anyway, in the business income calculation, donations and gift should be disallowed. Why? Under section 11, it is not incurred for the production of income. Then fines and penalties, it's under section 10, subsection 1, it should be disallowed, but we need to check whether this is government penalties, what we have to pay to the government or not. All things are in the subsequent notes. Allowance paid to managerial staff, operating lease rentals on motor lorries, provision for gratuity, it should be disallowed because under section 10, subsection 1b, the item 7 or item 8, it is very clearly mentioned, this is the disallowable expense, transfer of provisions to the accounts. Amortization of intangible asset, disallowed. Then you all know, okay, there should be intangible asset. Then travelling, foreign travelling, repair to computer purchase in 2019. Section 14, repair and improvements. How we are going to apply that? Okay. Then provision for impairment, it's a provision. Then what we are going to do, it should be disallowed. Then building maintenance and repair, there is issue. Building maintenance, no issue. If it is incurred for the production of income, it is revenue nature expenditure, not a capital nature, then it should be allowable deduction. But there is a wording of repair. Now what to do? Under section 14, we have to apply. And the finance cost, that's why I have mentioned in my mind map, I am separately coming to this. Section 18, this plus section 12, the restriction on finance cost, which is in the section 18, and the claiming of finance cost in the section 12. What are the composition of the finance cost? Long-term bank loan interest, short-term bank loan interest, overdraft interest, finance lease interest on 5 forklift, finance lease interest on computers. These are the, now there are 2 financial leases, finance costs separately given. Now you should be mindful why these 2 separately given, any other additional information do we have. Then now in the exam, taking 5 minutes, I am reading this part. That means from other revenue, the P&L we have read, income we had, from the note we have taken the maximum benefit, then other income we have taken the at a glance picture. If I am the student, when I am reading this, I am taking my pen and for an example, If I have taken the other income, profit from disposal of PP, I am writing. It should be removed, it should be deduct or a minus balance or a minus mark. Gain from realization of quoted public share, it's under investment income, minus. Gain from disposal of investment in small limited, it is if a share disposal of a private limited company, it's under investment income, then minus. Dividend under investment income, minus. Rent under investment income, minus. All these notes I will put. And when it comes to expenses, entertainment, I am in 21,900, it's at 21.9 million. In that I am putting D, disallowable. Donations and gift, D. Finance penalty supposed to be D. Then provision for gratuity, D. Advertising, we don't know, we need information. Depreciation, it's disallowed, D. Amortization, D. Foreign traveling, we don't know. Repair to computer, we don't know. Provision for impairment for time being, it's disallowed, D. Building maintenance and repair, we don't know. And the finance cost, time being, we can't do anything. But when reading the question at the 5 minutes, you can analyze all these things, and then I am starting my question from additional information. It's very, very important. Then the P&L, it's a summary of the expenses and income. Now we are having our additional information with us, which we can link these notes to the P&L amount. We will now start the high level of reading and high level of understanding of the question. Then the company carried out a stock verification on 31st December 2019 and valued the closing stocks in line with the LKS2. Correct. What is the valuation? Cost on net realizable value, whichever is lower, and duly shown in the accounts, correctly shown in the accounts. Further, after considering the possible drop in the demand on diesel engines separately, engines specially designed for sport boats used for tourism, the management made a provision of LKR 26.4 as provision for possible value drop of inventory. What is the word in here? Provision for what? Possible value drop of inventory by debiting the cost of sale. Where this now? It's in your cost of sale, debiting the cost of sale. Provision of possible value drop of the inventory has included in cost of sale. Can it be deductible? No, it shall not be, because it is a provision. Then at the request made by the Minister of Higher Education, 5 boat engines costing LKR 25 million were donated to Ocean University of Sri Lanka, and the said cost was charged to the donation and gift account by crediting the cost of sales. The acceptance letter has been obtained from the Ministry of Higher Education. Now see, here what happened? One provision 26.4, there is a provision debited to cost of sale, we should be disallowed that. Second one, donation of goods to where? It's a Ministry of Higher Education. Donation of goods to Ministry of Higher Education, what's the meaning of that? Donation to the government. Donation to the government, then this donation is a qualifying payment which we can claim without any restriction. But in the business income calculation, this should be disallowed. Now we will see, I am going again to the notes and we will see the donation and gift. It is 1,470,000 should be disallowed. It's shown that this 25 million has donated to Ocean University of Sri Lanka, and the said cost was charged to donation and gift account. Then we assume that it has included in the donation and gift, but the amount is only 1,470,000. We have to, anyway we will think that it is deducted, since the note has given, it has deducted from the cost of sale, then we will take it as it has already deducted from the profit before tax, even it has not come to this 1470. Then we will go for the answer, the business income. This is my format, Pinnacle PLC, TIN, Schedules to Tax Computation for the year of assessment 1920, Schedule 1, Computation of Assessable Income from Business. Here, net profit before taxation, I have taken, it's a rupees 1000, then 5,493,000,000 is my profit before tax. Now, next one, provision for possible value drop of inventory. It is disallowable under section 10, subsection 1B8. Any provision, it should be disallowable. I am not telling you to write the extract section like I have done. Now see, I have mentioned the particular section, section 10, subsection 1B8. But I suppose, if you can remember these things, I suppose you to write this. It's adding value to your. If not, it's disallow section 10, subsection 1B. At least write that. If you cannot remember even like that, then write disallow section 10. But if you can go for far, it's adding value to your. Then 26(4), it's a disallow. Then donation of 5 boats engine to Ocean University of Sri Lanka, it's a disallowable expense 5. It's not incurred for the production of income, section 11, subsection 1. That's why very clearly given what is the reason for disallow, not incurred for the production of income, 25. Okay. Since it is given in the note as deducted, I have to add back that. Then in the same, while the other donation in the income statement, section 11, subsection 1, it should be disallowed, not incurred for the production of income. These are the two donations, it should be disallowed in the arriving to business income. Now I have told the importance of the format. What is the importance of the format? Now go for your taxable income. In that taxable income computation, here less qualifying payment, section 52 and 5th schedule to act. In that, write this donation to government. You need not to write this 5th schedule 1, the 5th schedule para 1B can claim up to the assessable income. No, you need not to come to that extent, but when you are reading that paragraph, adjust this, disallow in the business income, and it's a fully, you can claim up to the tax in the act, its a wording is to claim from the up to the level of taxable income, but actually we are not in a position to take the taxable income before the deduction of qualifying payment. Then practically we are taking claim up to the it is assessable income, but in the wording in the act up to the taxable income. I must tell that no, in the wording it's a taxable, but here it's a the even computation of that restriction is very clearly given 1/5 of taxable income, not the assessable income. But in the difficulty of calculation, we are taking into assessable income. Then here 25 we have deducted. Now from reading of one adjustment, we have put that adjustment to the both places. It has done. It has completed. Now we will go for again question. The first adjustment we have completed and done with the income statement too. Next one, on 20th 12/2019, Pinnacle PLC disposed of 2 pool of motor vehicles which were used only for business travel in and transport of staff. The details are as follows. Now, it is given two pool of motor vehicles. What's the meaning of pool of motor vehicles? It's not allocated to the Mr. X, Mr. Y or a managing director, not like that. The pool mean it's for the company purpose, it has use, but there are two purposes, travelling and transport. We will see how this going to tackle under the provisions of the Act. Then there is a motor car and there is a motor van. Motor car and the motor van. Before coming to this adjustment, I need to explain the particular all the adjustment relevant to the freehold assets and the leasehold assets in the tax computation purpose. We will come to that first and after that we will come to this adjustment. Okay. Then we need to look at the what are the provisions applicable for fixed asset additions, disposals, capital allowances, leasing asset, transitional provisions and all. We will take that adjustment in the next session with the mind maps and the explanation of the paper. Then we will take a session break and we will come to the next session with that adjustment. Okay, thank you.